Absolute to have you all here as always. So good evening, good evening, good evening. Happy Diwali to everybody. And I hope you had a fantastic day. You're going to have a fantastic night. So happy Diwali again. So guys, today we are actually going to talk about a very special topic because I believe that perhaps when it comes to trading psychology, there perhaps might be a little bit of a misconception because all we talk about so far is about understanding ourselves on an inner level, on a deeper level, which is absolutely necessary when it comes to trading. And in all honesty, it is something that you should understand in terms of growth and wanting to achieve new things, new heights, and new levels in terms of even your career or your businesses or the business ventures, etc., etc. So actually, in order for your mental edge to be able to adapt to the needs of trading, and in order to facilitate your strategic edge in the markets, your mental edge also has to be supported by numbers and by understanding what are the sequences in trading, in business as well, and other areas of your life that may develop, and how you have to persevere through those sequences in order to get where you want to get to. So the most important factor when it comes to trading psychology is about developing that belief, understanding, and knowledge about your mathematical edge. Because your mathematical edge and understanding it on a deeper level is going to allow you to fully give yourselves to the probabilities in the market. Because if you do not accept the randomness of the potential probabilities in the markets, you will struggle to grow as a trader. So it is something that we really need to discuss. We really need to dive into, because success in trading, consistency in trading will not come without embracing the true mathematical edge and what probabilities mean and what can we expect. Why? Because trading is all about numbers, and it's actually about developing a mental strength, mental attitude, and mental resilience to allow for the numbers to play out in your favor over a long period of time. So it is all going to be all about understanding the power of your data and how your data can empower you, how other businesses are running in exactly the same way, and how it is impossible to get the same wage from trading on a daily basis, on a weekly basis, or even monthly basis, because that way you would limit yourself in terms of the actual potential of what you can get as a trader in terms of the actual growth of your P&L, but also you would limit yourself or underappreciate the value of yourself as a trader when you don't fully understand that sometimes there will be thinner months, sometimes there will be bigger months, and understand the frequency of it and randomness of it. Because I believe it is the randomness that inflicts the anxiety in traders. However, the lack of understanding of the probabilities, the lack of understanding of our own emotions, the lack of understanding of our own personalities and urges and our strategies and the data behind our trading strategies, that causes that anxiety in the markets. It's actually self-inflicted, because if you think about it, the market does not make you feel in any way. It doesn't have the power to make you feel in any way. The market is there whether you are there or not. The market will move up or down or to certain pricing, whether you sit in front of your laptop, computer, iPad, or your phone or not. It will happen regardless. So anything that you experience is due to your personal interpretation of what the markets are doing. Why? Because you are putting your personal meaning behind each trade. And what we have to open up your mind about is actually understanding the power of number of trades and what the certain number of trades can do in terms of your growth, in terms of trading paying you on a regular basis. So we don't want you to self-inflict pain. We want you to understand what is happening and why it is happening and how you can manage your expectations. But I will tell you from the get-go that if you will not work on yourself and develop that skill to understand the data, the probabilities, what the probabilities actually mean, what trading edge actually is, you will be struggling. However, this is why we have this session, because I will be able to provide you with information and plant a seed. And thanks to that seed plantation, you can explore it further. And I believe it's going to trigger certain thought processes and things that perhaps you have not thought about, because perhaps you were aware of the mental edge, of the technical edge, and actually what all of that means. But we're going to really delve into that subject. And then, of course, it will require a certain amount of self-reflection, and it will require work from your side. But putting that in front of you, it's a first step. Now it's all about acknowledgement and then putting momentum behind it, meaning you putting action behind it. So let's go into the first slide, and I hope you enjoy it, because it is a very enjoyable subject, because it focuses on the true edge and what those true edges, when we understand them, can mean, which can help us to slow down a little and truly understand for what the markets are. So your trading edge. So without going deep into things, there is a certain thing that I always repeat in every single session, or at least majority of the sessions. How you can develop your trading edge in a market is, well, first of all, you have to have a strategy, okay? And look, by the end of the day, when we look at the charts, whether that is gold, whether that is Euro USD, whether that is GBP USD or stock market, at the end of the day, we are all looking at the same data. It's not that if you are trading a different strategy, you will look at different data. We are all looking at the same data. However, the reason why there are different strategies, because everybody has different interpretation of that data. And that data is based on a repetition of certain patterns and certain things that do happen in the markets. Okay, that's fine. Now, there are people, mentors, coaches, that are able to comprehend that data, name it, label it, and then provide that knowledge and pass it on to others. So when you are learning how to trade, when you just come into the trading, what you will do at first, you will try to find a mentor or a strategy that resonates with you the most, that the language of it suits you. Because again, we look at the same data, but some people will use very complicated language to explain things, whilst others will focus on more simple language. And again, something that works for you may not work for me. That's where those differences in trading come from. So at first, it's only natural to actually copy another human being and to actually say, well, do you know what? They are good at trading. They have X amount of experience in the markets. They are great educators. We can see they've got a vast knowledge about the markets. So what I'm going to do is I'm going to say and do, rather do than say. They're going to say, and I'm going to do word by word what they say and implement it in the markets. Now, there's already one issue that is arising, because with any strategy, what you have to do is you have to repeat the same process of execution based, i.e., on certain criteria of entries. But you have to do it over a period of time and not change it in order to understand that it works. However, the biggest problem behind any strategy is the trader. and I wouldn't call it a problem, but this is where the variation comes from. And later on, we're actually going to talk about variables and certainty and how we can recognize between the two and what actually is a variable and what is a certainty in our lives as traders or even in life. But here we have a trader. And like I said before, and this is the reason why trading psychology has a place in trading, is because a person behind the strategy has different personality types, different experiences, different level of knowledge, different financial background, different limiting beliefs, different empowering beliefs, different growth mindset. There are so many different components to a person, and that's what makes us unique as human beings. But that also translates into being different on the charts, comprehending the data differently, understanding things differently, perceiving things differently, which they can lead into different type of interpretation. And as we know, the interpretation is done by the thoughts that produces an emotion and behavior. So your edge, essentially, in a nutshell, is your technical data or your technical strategy in combination with trading psychology. And that marries up together because the numbers have to suit the person. And once the numbers and the strategy and the person meets, and once the mental altitude is built to allow for the numbers of the strategy to play over a period of time, that builds us a really nice and really healthy risk management techniques. Because then when you have a full understanding of strategy and technical analysis, and then good understanding of yourself, of your triggers, of your thoughts, of your emotions, of your narrative, on how you reflect, or on how you grow, how you collect feedback. Once you have those two things, you will be able to understand yourself on a deeper level, and you will be able to understand what type of trader you are, because your edge, personal edge in the markets, is not longer repeated from somebody else. It is something that becomes your own, and it is unique to you. And it's a journey, and there will be trial and errors, and some traders take some time to develop, and that is absolutely fine. But what you will be able to notice is the type of trader that you are. Are you the type of trader that would rather risk small, 0.2% on a funded account, for example? And if you recognize that's the type of trader you are, because it gives you ease, where you do not put pressure on yourself in the markets, and you are trading small percentages, that way, without that pressure and without stress, what does that do? We already know from previous sessions, we are able to then perceive the markets for what they actually are and engage logical brain rather than emotional brain. As we are able to engage the logical brain, we are able to perceive the information for what it is, analyze it, execute better, and actually have better returns. Yet there will be other traders who will actually notice that risking as little as 0.2% may actually cause them to be reckless in the markets, because they will not perceive the value of the trades for what they should be. They've got perhaps different appetite when it comes to risk, when it comes to reward. And because of that, they will become reckless, and they may notice that actually what is beneficial to them is to risk 1% per trade, because yes, as much as there is more value in terms of percentages on that trade, actually that makes them focus in on the charts more, where they perhaps are only focusing then on only a star in inverted commas setups. And then they would rather to take one great setup per week rather than to be multiple times in and out of the markets. Now, one important factor that I want you to acknowledge, that as you grow, the appetite and the risk tolerance will change as you grow. I myself experienced first when I would have rather to risk smaller, and that was giving me the ease. And then this is how recently when I was approaching a new challenge, I thought, oh, this is what I should be doing. But then actually what I've realized that now I got used to a bit higher risk, and actually the higher risk is pushing me to be better in the markets and to filter out the noise better, so then I can focus on higher quality setups. Now, it may fluctuate as you grow, as your needs change, as you grow as a trader, and that is only natural. So only because a certain person says, this works for me, what you're doing is wrong, and perhaps you're not going to get what you want out of it, it's not true, because they are perceiving the situation through their own lens, through their own experience, through their own level and knowledge, and you might be actually way beyond them, perhaps at the same level or below. It doesn't really matter, but what matters is what works for you. So I want you to focus and think, all right, what type of trader am I? Am I the type of trader that would rather come into the markets and would rather focus on one trading session, let's say London session, win or loss, take one or two setups, move on with my day? Or am I the type of trader that is trading both sessions? Or am I the type of trader that is holding one trade over a period of a day, so you're a day trader? Or maybe actually being a swing trader is something that helps you to grow, because everybody will have different perceptions, interpretations, and different perception of risk. Different perception of risk really plays a major role. And every single person, whether they are a swing trader, whether they are a scalper or a day trader, when they explain their reasons to me, those reasons make absolute sense. Okay? So it really does make sense to me why they are doing it, because they explain, right, I would rather, okay, to actually get in a trade, start of the week, get out about Wednesday. Once I get out on Wednesday, I feel like I've risked just 1%, and win or loss, I move on. Whilst other traders, that would trigger in them lack of control in the markets. And as that would trigger the lack of control, then they obviously would spiral. Others, scalpers, may say, well, I actually need the control of actually knowing what is going to happen. And I'd rather to be in and out, take my money or lose and move on. And I'm done. But this is where a balance needs to be caught, because with scalping, it's so easy to just get stuck, on your charts for the longevity, and that obviously can be really bad. On another hand, with some swing traders, if they are hesitating about taking the trades, then they may miss an opportunity. They have to wait for a week or, whatever period of time. So it really is about what is going to suit you. Now, that's your trading edge. And with your trading edge, your goal is to achieve trading consistency. So that is why it is so important for you to explore the strategy that works for you, to facilitate the strategy with your mental edge and by understanding yourself, and to create then risk management that is going to be precisely suited to you. What is precisely suited to you depends on you. The risk to reward ratio that you are going to take, whether you are going to enter multiple positions, whether you're going to take partials, whether you're going to trail, what kind of management techniques you are going to use. Are you going to use break even? Why? What is the reason? And why I would like to encourage you to do that, whilst you have to explore those things, I would want you to always find the reason. And this is where a lot of the times when we have those sessions, whether it's a webinar on Sunday, whether it's a workshop on Wednesday, or a traders roundup on Discord, when a trader comes forward and says, perhaps the strategy that I'm using is not working for me, if we adapt any changes, if I give some kind of tips about different risk to reward ratio, etc., the tip number one is ensure that your decision making is based on data from a back test or data from the forward test, because as you collect your trades or as you review the markets, you may notice certain patterns that keep on happening, that i.e. on Wednesdays, you always are taken out at break even. Or that you may notice that actually on Fridays, there is always a pullback because price is creating a weekly or daily candle wick of the candle. There will be different things that you will be noticing. So any decision that you make, don't make it based on, I think what's the best is to do X, Y, and Z. Always base it around data, because data is going to be able to tell you if that works or not. Another tip, though, that I have is that even when you will have the most profitable strategy right in front of you, if it's not going to suit your personality type, like we said, your persona, your perception of risk, perception of reward, etc., even though it is a profitable strategy, you don't have perhaps some capacity in terms of skills to allow for those numbers to play over a period of time. Okay, so that is something that I really want you to consider. Now, one thing, and one of the part of probabilities that I really want you to think about is one very major acceptance of what trading is. Okay, and this is where your self-perception will not self-perception, perception of the situation and interpretation of the situation will play a major role. Because like I said to you at the start in the opening slide, that a lot of anxiety, a lot of trading pain, a lot of emotions are self-inflicted due to your personal perception of the situation. And it's not that in the markets you can't lose in order to make money at the end. It is that in the markets you don't want to lose, and that is the problem. So number one step to actually accepting trading is accepting that trading is about taking profits, taking losses, taking break-even trades, and missing opportunities. At the moment, or very often rather, traders put taking profits on pedestal, and they say that's what trading is. Successful trading is always taking profits. No, successful trading is that when losses happen, you hold yourself accountable and you have enough skills not to break your rules. Successful trading is taking break-even trades and understanding that even if it's a break-even trade and then the trade goes your direction, it doesn't really matter, because your number one job is to protect the capital. So if your data told you that this is actually a feasible way and productive way of managing your trades, then all is well and good. Successful trading is also understanding that you're going to miss opportunities, that you cannot catch every single move in the markets. And whenever you will try to catch every single move in the markets, this is what you are going to lose more than win, because you will be so afraid of giving back money, you will be giving so much more money, which is just so ironic when it comes to trading. And I need you to understand this, and I need you to take that first step into thinking, yeah, trading is about taking profits, losses, break-evens, and missing opportunities. And they all as equally valuable to each other. And all of those need enough love and acceptance in terms of what trading is. And I need to just understand that profits, losses, missed opportunities, and break-even trades will be randomly distributed. What we would want in an ideal world is to always end our day in profit, to always take profits, to start the day with a profit, to end the day with a profit. But again, that's your personal expectation. That's your personal perception. That's your personal interpretation of what trading should be. But that's not what trading is. And your perception of what it should be is jeopardizing your skill, is jeopardizing your potential, is jeopardizing what you can actually get out of being a successful and professional trader. So that is the first step of acceptance. So I need you to remind yourself about this. I need you to read about it. I need you to dive into it. And I need you to then acknowledge, once you have acknowledged the 4 parts of what successful trading is, I need you to also understand that it will be randomly distributed. And look, of course, The reason why you perceive things the way you do is due to how we are built as humans and how our brains function. And we have discussed that in our previous sessions. So those who were here for previous sessions, I've touched on it before in a variety of subjects about how our brains function. If you are new here, you can always catch up on our YouTube channel, on Funding Pips YouTube channel, and look at the sessions where we talk about brain rewiring, how we work, why it works like that, and how the brain always looks for a way to protect you. So I will tell you and give you an example how your brain works. And I'm going to give you an analogy or an example so then you can see the baseline of your brain and how it perceives trading. So I want you to think about your loved ones that are not traders. Okay, so I want you to think about either your partner, parents, brothers or sisters, whoever that may be. And those people have nothing to do with trading. It's you who's the trader. However, let's say you're not the trader that you would want to be yet. You may be not yet as consistent. Maybe you have not yet reached a payout, or maybe you have not yet made any money on your personal accounts, but you are learning and you are growing and you're actually achieving a lot of milestones on the way. You have your epiphany moments where you think, wow, this is something I haven't noticed before, but now I'm seeing what the market does always during New York session open. Wow, I noticed that actually at this time, we really have high volume when the stock market opens, even though I'm trading Forex. There will be epiphanies. There will be things that all of a sudden things will be clicking in your brain and be like, I'm growing, I'm moving forwards. However, the people around you that love you, that want you to succeed, do not yet see the results, monetary results of your skill. So even when you experience your epiphanies, very often it is easier to share them with other traders because they can resonate with our journey and what we're going through. Sometimes when you may actually share your epiphanies with your partner, with your parent, brother or sister, even maybe your child, they may say, really? Okay, fine. And they just move on from that information. They don't give you that full acknowledgement. They don't celebrate you perhaps the way you would want to be celebrated, and don't recognize the hard work and maybe the amount of hours you have put into back testing to actually find that information out. And that is not because they do not want you to succeed. That is because that is essentially how our brains function. When they don't see the results, and what is the result from trading for a person who's not a trader? Money. That's how you measure trading success on a very basic level. You're a good trader, you should be making money. How much did you make? No, I haven't made anything. I've just reached another milestone and everything just clicks today. And they are like, oh yeah, okay, fine. So again, they want to support you. They do believe in you, but they don't understand you on that level. What that shows you is actually how our brains work. So now your brain functions exactly like your loved one's brain. Your brain doesn't see the results. Your brain doesn't see the monetary return yet. So you may think, are we actually doing well? This is where the self-doubting starts. This is where self-criticism starts. And this is where you have to acknowledge, and again, teach your brain and acknowledge the level and your brain's level of understanding is about trading at the moment. And then take your time and take that extra mile to teach your brain, look, but there's actually so much more to trading growth than how much money I have made. There is so much more to trading growth or the monetary return of trading. And that is measurable in me, journaling, in me reflecting, in me putting endless amount of hours in back testing, endless amount of hours in forward testing, really looking at the charts, really reviewing, really looking at one pattern, what works, what doesn't work, really, going in deep, putting myself in my discomfort zone in order to learn that skill, despite my 9 to 5, despite my, other commitments. So this is how I want you to think about. I want you to think about the understanding of yourself and the level your brain is at in terms of understanding truly what trading is, because only the true acceptance of the actual business of trading is going to help you understand it. And look, let me just give you an example. So the reason why also, and I want to explain it to you on another level in terms of why our brains struggle so much with it, is let's compare trading to a business. And you know, trading is that you put the money in a brokerage account, and let's say you have invested or deposited $1,000, or let's say $10,000. Okay. And then let's say that obviously you're not just going to go on a tilt and blow it, but there will be times where on your P&L, this is your starting point, perhaps you will go up and down or just below the break even for a certain period of time, maybe a month, maybe 2, maybe 3. Okay. Now, if you invested $10,000 into a business, okay, where you build a website, perhaps, where you buy a product, you know, let's say you buy lamps. I'm just looking at a lamp and I'm thinking lamps. You buy in lamps and you're going to resell them. And, you know, you may set up an online store, and then you will actually have the physical product. It will have different colors. You will, you know, utilize different social media posts, etc., etc. It may take some time for you to sell them and make money on top. Okay, because you will have to spend 10,000 on the product. Then you will have to facilitate the website. Maybe you want to run some ads. So actually the expense might be even more. The point is 10 grand is gone, invested. But because you have a tangible thing that you are holding in your hand for that amount of money, it is easier for your brain to accept it for what it is and what you have done. Whereas when you just deposit the money in a trading account, you expect the results straight away. So you know that business owner who invested 10 grand and who may set up an online store, eventually they may actually also decide to set up an actual physical store. And what I'm trying to explain, that despite them investing into the product, they may also have other expenses. Maybe they staff, maybe the bills, electricity, maybe ads, maybe a website, maybe some other advertisement, maybe doing some giveaways, giving some for free, you know, and eventually they will have to sell a sufficient amount to make money. Whereas with trading, you just put in the money and you are, let's say, minus 8% for longevity, and maybe sometimes minus 15%. And maybe then you go back to break even for some time. And for some reason, for our brains, it's easier to accept this scenario, not even to our brains, to our society. It's easier to accept this scenario, and people will congratulate you and say, well done on opening your business, even though you just spent 10 grand. Now you've got a product and you have to move that product and you have to figure out how, and there are also other expenses that are growing on top of it, but people will congratulate you. Well, whilst you do that with trading, and perhaps you will lose 15%, 20%, 8%, maybe you'll be a bit up, a bit down, but actually not make any withdrawals, people will say, why are you gambling your money? And that is just the face of it. That perception of what it is. And so this is where you should start thinking about your trading as a business, to help your brain to comprehend the information, the money that's invested. Because also another thing is the 10 grand that you actually invest in trading account and deposit it, you can actually withdraw back. Obviously, if you go down, you can't. If you go down on, you know, P&L and you've got minus 15%, etc., you can't. But that money is still there until you blow full account. Now, if you blew that full account, then people would say, yeah, you just gambled the money away. You've got nothing out of it. But if the business goes bust and actually you don't make enough sales, or you are lucky to make back break even and actually lose that money, people would say, it's okay. All businesses start like that. You've done well. Again, it's all about perception. It's all about the judgment that people are making. But that just shows you, again, how our brains function. And your brain does not function differently to other people. Yes, there are variety in our brains in the way we understand things, but I'm trying to say there is a certain baseline, and that's your baseline. So what helped me in the past to understand, to help me understand trading for what it is and the probabilities, I started thinking about it as a business, because everybody says treat it as a business as it is, da, 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 da. And obviously it's the right thing to do, but sometimes you need a guidance to understand, well, how should I treat it as a business? And we're not talking about rules, we're not talking about reviewing the market, we're not talking about habits, we're not talking about any of that, but actual the functionalities of the business. So what I used to say to myself, and you may think, wow, she lost it. She lost it. That's what she used to say to herself. But it really worked, and it may actually work for you as well. I used to trick my brain into more pleasant experience, what is more acceptable as a society. So whenever I made a loss in a market, because let's say I ended the day in a loss, minus 2R, minus 3R, okay, within my remit of what was actually allowed, then I would say to myself, okay, I just paid an invoice for an engineer to help me fix my, how smoothly my business works. I was thinking of random invoices in my head that I would be paying if I had an actual physical business. And that truly helped me to justify a lot of things, because that's how I started perceiving it. Or let's say would have a losing month, and let's say it's minus 6%. And then I would think, and I'm talking here like personal accounts as an example, just to give you clarity of what I was talking about and how I was doing it. And then so I was like, okay, so this month we did not sell the sufficient amount of lamps to cover our expenses, because again, in order for you to make money as a business, there is certain amount of expenses, let's say $2,000 per month, and therefore you need to sell X amount of lamps just to break even, and anything on top to actually give you any profit, So again, that's how I was thinking about it. I was like, okay, so this month I did not make sufficient sales in order to, move forward and in order to actually make money, but my business still exists, is still there, so whether I make 50 quid or £200 or £10, doesn't matter. Profit is profit. The same goes into the business, into an online store, into a physical store, into running a restaurant. You could go to the biggest and busiest restaurant on the weekend, and you see how busy they are, and you think, oh my God, on average, people spend here £40 on average. They may have, let's say 400 people coming here. So it is about 18 grand that they would be making. Yeah, okay. But because it's such a huge place, and because they are selling 18 grand worth, they also have to buy the product to sell the food and prepare it, chefs, staff, waitresses, waiters, bar people, electricity bill to run it, water bill to run it. And actually, plus minus, the actual profit might be £3,000 for that day for the owner. But all of the expenses are covered. It's the same with trading. But for some reason, traders just expect for the trading to pay them. And when the trading doesn't pay them, they get emotional, angry. And they think, why am I not growing? Why am I not moving forwards? But actually, when you start thinking about it in, okay, plus minus, at the end of the week, I've made 2R, right, fine, not the best week, but I am in some profit. Okay, at the end of the week, plus minus, I'm minus 2R. All right, cool, fine, whatever. Let's review, let's refine, let's feedback to ourselves. Let's learn why did it happen here? Okay, I hesitated with my entry. Because I hesitated with my entry, then afterwards I hesitated with another one, and then the market actually moved in my direction, and then I just entered a trade because I experienced a FOMO. Okay, fine, acknowledge those things, learn about those things, learn about the behavioral patterns that you are actually applying in the market, but then start thinking it like a businessman, like a businesswoman, like an entrepreneur that you are, because you do have, and that's what entrepreneurship gives you, and owning a business gives you, and trading gives you, that your income does not have a ceiling. But that does not mean that you should expect from it to pay you 100K every month. You need to build it up to the point that is going to pay you 100K per month, like with any business as well. But you know that on average in the UK, I don't know the statistic, amongst all of the sectors, but on average, it takes 3 years for any business to actually start making profit. Whether you open a barbershop, whether you open a restaurant, whether you open, I don't know, recruitment office, or, and obviously this is an average. I know that there are varieties in terms of different industries, but that's what it takes. You have to develop yourself a brand. You need to develop yourself, trust with the people. You need to then keep on providing the service. And there will be problems that will be arising, not just smooth sailing. Smooth sailing is actually 9 to 5. You go in, you do your job on time, you turn up, and you have stable amount of money always coming in. And that is security. And that's what our brains like. Because I told you before, what do our brains like? Predictability. That paycheck is predictable. It's coming. With trading, I don't know what I'm going to make at the end of the week. Yes, there is some prediction based on my past performance, but it's not accurate to the dots. It might be 2 or it might be 10. I don't know. What about the month? I don't know. And you have to allow yourself to go a little bit with that flow of things. And this is the reason also where people put so much pressure on themselves, having to make X amount from trading from a funded account because they want out of their 9 to 5. Don't rush getting out of your 9 to 5, because putting that pressure on your trading and to actually, having to make certain percentage is not healthy. Where if you think about it and just go into markets and say, I accept whatever the markets pay me, your trading will level up. It will level up. Okay, let's move on. And at the end, we can chat. You can ask me questions. We can, think about certain things. So now I want to talk about probabilities in action. And we're going to talk about gambling. And gambling industry, or mentioning gambling and trading, can be painful for some, because a lot of traders are accused of being gamblers, and a lot of investors are also accused of being gamblers. But let's be honest, some traders become gamblers because they don't actually treat trading as they're supposed to treat it. I'm not sure what happened, guys. Let me just try to figure out why my light just went off. I do apologize. Oh, you can still see me, so that is fantastic. My light went off, but I'm still here and you can see me, so that's absolutely great. So let's continue. I do apologize, but my light just went off in my room, but I seem to still have internet and we are live, so that is great. So I want to talk about gambling industry because this is what helps you understand probabilities in action, because casinos make money consistently with a random outcome. Okay, consistently. So forex traders kind of don't believe that market's outcome is random, because we are learning certain patterns that are repeatable, that create our strategies. Okay, so we kind of don't think about it as completely random. However, it is random in terms of the result that you may experience from each trade. And that's exactly what happens in casinos, because they have expectancy in terms of, what is going to happen and whether the edge works, whether the edge doesn't work, etc., etc. However, it is all down to maths, and it is all about the tiny mathematical edge. Now, this is very important because I want you to remember something very, very well, right? Even though trading psychology is absolutely necessary for you to succeed as a trader, because it all starts with our minds, the way we interpret things, right? However, if you do not have, in terms of your technical edge, I told you technical edge, psychological edge creates risk management. And this is the 3 pillars of being a successful trader. So what I'm trying to say to you is you can have the best psychological edge and you can spend hours on it. But if your trading strategy doesn't have that small edge in your favor, you're not going to make it work. This is why the two are so important, because maths here gives us the power. All right. So this is what I want you to think about. Casinos. We're going to talk about blackjack. So in a game of blackjack, casinos approximately have a 4.5 edge over the game based on the rules of the game of blackjack. This is, of course, a requirement of a large sample size. So I'm not talking that in blackjack you have 4.5% of the edge of a one game over a player. No, it is for the large sample size. So not measured in just one table, one player, but the number of hands being played. So it is the total of all customers per day, per week, and per month, and even per quarter. And this is how casino will always generate 4.5% on every dollar spent in the casino. Now, remember that this includes the big winners, the big losers, and those at break even and in between. So this works out at something about 4.5 cents per every dollar spent a night, which seems like very little, but for example, over a period of a year, they make $4.5 million. So let me just say that to you again, all right? Casinos make 4.5% of every dollar that is spent in blackjack. And we're talking just about the game of blackjack here, okay? 4.5%. Not from as a sum, we have the equation 4.5% every dollar spent, which is 4.5 cents for every dollar spent. However, that is not measured based on one person, but a large sample size over a longer period of time, week, month, quarter, a year. And it includes big winners when the person actually wins, the customer, big losers when the customers come and lose a lot of money, and those in between that just come for a little bit of fun and they just move on. But at the end of the year, with just 4.5% edge, the casino makes 4.5 million from the game of blackjack. Now I want you to imagine something. I want you to remember all of the accounts, trading accounts that have been sacrificed. The challenges, maybe not the challenges, but the funded accounts, the personal accounts. And I want you to think about where would that account be if you just allowed for your trading edge to play out? I think you would be surprised where that account would be if you actually allowed it to compound. And let's say you compounded that. I give you a simple example. Let's say on average for £1,000 account or $1,000 account, you would make 1% per day. So for 3 months, that would be 20%. 4 months, that would be 20%, 40, 60, 80%. 5 months, that would be, so 20 trading days, okay, on average. So 5 months, in 5 months, if you just focused on 1%, okay, 1% per day on a £1,000 account, which is $10 or £10, in a space of 5 months, if you just consistently focused on executing your edge, you would double that account. So if you can double £1,000 account, you can double 10,000, 20,000, 50, 100,000. This is not saying that you should be taking profit every day. This is saying that on average, if you only made X amount, at the end, you would be able to achieve things that are beyond your imagination. Now, there are also compounding system that could come into it, because as your account grows and you are obviously now not, because you can always risk 1% of £1,000 or $1,000, or as your account grows and eventually is 1,500, then obviously 1% would become 15 instead of it always being 10, which is the even more powerful technique, because actually after 5 months you would be somewhere else. And I'm going to send you a compound calculator, and I will just give you a simple example. And actually, I'm not going to send it to you. I'm going to show it to you. I'm going to show it to you during our workshop on Wednesday. And I'm going to show you the magic of numbers and actually what those numbers could be doing for you. Okay, so that was an example of a blackjack. Now, I want to highlight something very, very important. And I want to ask you a question, and you don't have to answer in the comments. I want you to think about it in your head and tell me why casinos make money out of their edge. Like, what is the first thing that comes into your mind? They only have 4.5% edge, remember, over every dollar spent, and that is over a long period of time. Why their edge works? It's only 4.5%, not 50%, not 80%, 4.5, which accumulates to 4.5 million at the end of the year. I tell you why. I give you a little more to think about it. Is because they never change and adapt their risk to reward ratio. They always keep their rules consistent. Okay, their rules are untouched. So that's why they focus on a quarter and over an outcome of a year. They do not focus on the nitty-gritty stuff, or did one customer just spend that much, or that customer just spend that much. Obviously, they've got control systems in place, risk managers in place. That's a different ball game. But what I am saying is, when the dealer stands at the blackjack table and deals, they don't think all of a sudden, oh my God, we've had 10 losing hands in a row, so I should now adapt the rules of the blackjack. No, the blackjack game on its own is the edge. So yes, they may have 10 losing hands to the customer that is doing really well that night, but they're not going to change the rules of it. They're going to continue executing the same edge, the same rules, the same, and the cards come at random. So, and also, this is where there is certainty and variability. The variability part is the customer makes the decision. Do they put more cards on their hand? Do they stop? So there is a lot of things to it, but still they have that edge. And what's the difference between the house? Because house always wins for that reason. House always wins. And what's the difference between the casino house and us? Because we change the rules. As soon as we experience a losing streak, as soon as we have 3 losses in a row in terms of our trading edge, trading day, we immediately adapt and change our rules. And therefore, our trading edge cannot play in our favor. Okay? Where casino would never ever do that. And another casino's advantage is actually that the customer will get emotional. The customer will either start over leveraging, so that's what us traders do, over leveraging their positions because they have a winning streak, because they're doing really well, and they think, oh, okay, I can capitalize more. They start getting greedy, or they start losing, so they start putting more chips on one hand, and that's what makes them lose. And that's at the moment what traders are doing. So this is where you have to switch your position at the blackjack table, and instead of being the player who's filled with emotions, greed, want to do well, la-di-la-di-la, to become the dealer. And the dealer is in control of the game. The dealer doesn't show their emotion. The dealer is always doing the same thing over and over again. So what we have to think about is exactly and precisely that. Okay. Now, let's break it down further into understanding our statistics and what actually your statistics can tell you. So, of course, when it comes to variables versus certainty, data, statistics, mental and mathematical edge, it is a lot easier said than done. Because again, as humans, we have to learn to think in probabilities. And because that does not become natural to our brain, and the way our brain functions, chemicals, emotions, sensory systems, everything that we have, discussed, it is going to eventually be influenced. So, whatever happens is going to be influenced. And as it influences our chemicals and sensory systems, it will eventually affect our thoughts, emotions, and actions. So that's why we need to take that time to learn to program ourselves in a certain way. So our brains make us perceive what we know and what we know that worked in the past in the markets and the reason behind it. So we can predict the future of our trade in some kind of way. Okay. But this is what's going to help us to actually understand fully the edge that worked before and the reasons behind it and how we executed it and what was the reason, and to continue. So then you can continue even during those losing streak. Remember, the blackjack game has the edge in itself, and this is why it just has to be executed certain way. And there are variables to it, and the variables are the customer, how many people are sitting at that table, what kind of decisions those people will be making. All of those factors will affect the dealer, but dealer at the end still makes money, the house. And that's exactly what is down to you. There are certain things and variables. The only certain thing you have is yourself, your actions, what you're going to do with your edge, how you're going to execute your edge. And the variables are the markets, what happens in the world, what is going to be decided by somebody else's speech in the markets or in America that will affect the markets, or certain data that will come in the market. But house, the casino, has exactly the same, what we could say in inverted commas, a problem. They have exactly the same problem. The problem is that there are things outside of their control. All of a sudden, maybe 7 drunk customers will walk in, or 5 or 4, whatever the rules are for the blackjack table. And they will start making messy decisions or great decisions. And that is all going to have an effect. So how should you understand your data, and what actually knowledge of your data is going to give you? Because this is the level of casinos' understanding of blackjack. The reason why casinos function, the reason why casinos work, because the customers in the casinos get emotional and greedy. And casino sustains the same level of execution at all times. Losing streaks, winning weeks, losing months, losing quarters, doesn't matter. At the end, we are going to make our edge, and that is fine. So it's, what is it about? Risk management and not changing your rules, not allowing your emotions, 1 week's outcome, 1 month's outcome to affect you. But that is only when you have deep confidence in actually how your trading data works, how your edge works in a market. All right. So let's think about it. Your data is going to give you information about your losing streaks, about your winning streaks, about days with trades or without trades, number of trades per day, win rate, potential sequence of your trading outcomes. And that is your certainty part. The certainty part is when you know all of those numbers, you know what you can expect. But the uncertainty is the sequence. Because let's say you've got 50%, you've got 50% chance of your trading edge gives you 50% profit rate. Okay. So that means half of the trades you are going to enter are going to lose. But that's fine. That's your edge. And you know it. You've got 1 year of data backing it. That's absolutely phenomenal. However, what you don't know is the sequence of the single trade's outcome that's going to come at you. Maybe you're going to start your week with break even, loss, 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 and then win, win, win. And those sequences, random sequences of how your edge plays out, is going to have an element of impact on you, because when traders experience break even, frustration is growing, loss, self-doubt is growing. And before the data and your edge would actually allow you to take winners and actually end the week in profit, by that point you get emotional and you just start over leveraging, and these winners never come. However, on the weeks that winner comes and winner comes and winner comes, and then maybe break even and then a loss and a winner, that is an easy week to accept, because then you're like, oh, look, I've been doing very well accepting my edge in the market. But actually, I would only truly say that you would accept your edge in the markets when randomness happens, when you start your week with a loss and another loss and another loss, but you still will wait for your trading edge to play in your favor. So you have to acknowledge all of those things, and you have to think to yourself, okay, when I did well, when I passed the challenge, when I passed the challenge, what was the sequence of my probabilities? Okay, so my mathematical sequence was actually win, 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 missed opportunity, win. Fantastic. There is nothing wrong. Like, it's easy to deal with. So then you have to prepare. Okay, I'm doing stage 2. I had a good winning streak. And as per my data, it shows me that I could get 6 winners before I enter losers. So, okay, let's see what's going to actually happen. And then let's say you've got break even, missed opportunity, win, loss, win, win. Okay, not bad. Were you able to sustain yourself during that time? Okay, if yes, great, fantastic. But there will be times, especially for some reason it comes to traders, when they get funded, they do great through challenges, and once they get funded, it starts spiraling out of control a little, So then they need to be prepared. Okay, my edge works. I know what I'm doing. However, the randomness, the variability of my edge could come at me with loss, break even, loss. I'm ready for it. It's good. It's fine. Also, the number of losses, is it normal for you to get 5 losses in a row, 6 losses in a row, 9 losses in a row, 2 losses in a row? You should understand that, because if you do, and let's say you've got that 50% rate of winning, but you also understand that on average you could take 5 losses in a row, and that's fine. As long as that happens, this is where understanding your data should give you that peace of mind, where you will actually look back and say, do you know what, I'm undergoing a losing streak, is a bit stressful, but from what I can see, it's nothing unusual based on my data. So because of that, I'm all right, and I'm going to allow myself to just relax and not rush into trades. And this is one of the really important factors here to understand, is the mental data and mathematical edge. The mental edge supported by mathematical data, what I meant to say. Because once you actually understand the mathematical edge and the statistics behind how you execute in the markets, what is the risk, what are the potential, sequences, what is your expectancy, number of trades per day, without trades, winning streaks, losing streaks, what may actually happen. That way, you are strengthening your brain into understanding it. So always understanding fully your mathematical edge, and the sequence sets some level of anticipation and expectation. But what it does, it manages the expectation, and that expectation is not longer wilding in your brain, expecting you to do X, Y, and Z, achieve X, Y, and Z, but instead understanding that this sequence is normal, that this is all good in terms of how we are dealing with things. So that is going to automatically provide you with an incredible mental edge and strengthen your understanding of what may happen in the market. But before all of that happens, a lot of self-acceptance has to happen, and a lot of acceptance of what trading is and managing your expectations. Okay, so let's move to the last slide, and this is where, well, one before last, because actually we've got obviously the slide for the questions, but this is where I want to highlight to you that you are the decision maker. You can have the best trading edge in the world in terms of a strategy. But at the end of the day, a trader sits behind that strategy and makes the decision. However, I want to remind you the power that you have as an individual. And you can, and you are making your own decisions. But I need you to understand your data, what is trading, truly understand it. Understanding trading doesn't mean understanding a strategy. It actually means understanding how the business of trading works, the probabilities of it, the winners, the losers. Because remember, we put in taking profits on pedestal, but it's actually about acceptance of all of it, the parts, all of the parts of it. All right. And then when you do, you can fully make decisions, inform yourself, and think to yourself, what would help me to make better decisions in the market? Is it planning? Is it back testing? Is it forward testing? Is it reminding myself before every single trading session and reading my trading plan? Is it reminding myself of my entry patterns? Is it writing on my charts when I'm planning my trades, so I'm engaging in logical planning when it comes to it? What do I need to make better decisions? Do I need to review the markets? Do I need to review myself? How do I monitor myself on the charts? Those are all of the questions that you should actually be asking yourself with curiosity. You should be asking yourself, like any business owner, what can I do to allow for my business to perform better? But in the business of trading, we don't have staff, we don't have any other infrastructure other than brokers, providers, and our accounts and MT4s and MT5s, and where we analyze the charts. But the main person that is responsible for the growth of the business is us. Sometimes you get CEOs that have staff, and that those members of staff also grow certain parts of business. But here we're responsible for all of it, for the growth part, for the bad part, for the good, for everything in between. So you need to ask yourself, what is a way of making better decisions for myself, for me? Because what may work for, I can see names here, K may not work for Leah, but it may work for Jose, etc., etc. It is you, because everybody and every trader has things to work on. But one thing you don't notice about yourselves, my lovely people, the strengths that you are holding within yourself. Because every single one of you is very unique individual. And yes, you will be always growing in trading and you will be always moving forwards, but you already have strengths in the markets. And those are technical strengths in terms of how you analyze the data, what you see in the markets that others may not see, your mental strengths and your mental edges, and your characteristics about your personality and how you perceive things. All of those things really, really matter. And I tell you another thing that extremely matters and how would help you to also control yourself with your decision making is when you make decisions in life on daily basis, become better decision maker in life. So if you're the type of person that cannot decide when you go to a restaurant what to order, you just need to order and suck it up and live with your decisions, whether you enjoy the meal or not. All right, I've chosen this. This is the outcome. Okay, it wasn't the best. Whatever, move on. Just make better decisions. Watch yourself. How do you react to things when you're driving a car? When something doesn't go your way? When unexpected bill comes? When something happens and, I don't know, you crack your screen on your phone? How do you react? Do you overreact? Do you have emotional reaction, or you actually like, do you know what, let me just take this situation for what it is. And my approach in general is, well, it already happened. It already happened. There's nothing I can do. I can only focus on what I can do. So you have to focus on what can you do. What can you do to facilitate your mathematical edge in the market? And first of all, you have to understand your mathematical edge in the market, because the only reason why casino wins is because they are certain of their edge in terms of percentage, and they just keep on executing. There is a golden rule, and they stick to that golden rule, and they never move around it based on the losing streaks, winning streaks. They don't all of a sudden change the rules of roulette, of poker, or of blackjack. They don't change the rules. The rules remain the same. Why? Because they have confidence behind the mathematical edge, and they do not take to heart one day's outcome, 1 week's outcome, but they look at the overall outcome of their edge. And that's exactly what I need you to think about, to start seeing yourself in a position of being the house and becoming the house, rather than being the customer that walks to the table and gets all over the place based on each hand that they have and based on each outcome that they have. Okay, so that's the topic of probabilities. And as always, if you're here for the first time, or you hear like, you know, consistently coming to those sessions, Wednesday 6 p.m. we have our workshop, which is an extension of the webinar on Sundays. And this is where, you know, on Sundays, we open up the subject, we go into the theory about it, into understanding it. And then what we are doing is, we, on Wednesdays, put it more into action. We relate it even more to trading than ever, because first it's all about opening up that knowledge, and then it's applying that knowledge into us traders, how it works. Could be through case studies, could be through self-assessments. I will guide you through it, of course, and allow you to understand everything. But we will be talking more about this subject, and I'm really excited to talk about this subject more, because it's really vast, it's really deep, and I want to perhaps go through certain tables of probabilities and certainties. So what is certain, what is uncertain? And I want to show you the compound effect of numbers of your mathematical edge. I want to also break down more some data points for you to understand how that can help you understand certain things. And what I'm going to do is, I am going to, help you to understand the overall outcome, but then actually understanding the pattern of the overall outcome. And I think you'll be surprised, because sometimes you may see the overall outcome and think, oh my God, this strategy could give you 30% return in 3 months or 5 months or whatever, and or even more, whatever that may be. And you see the monetary value behind it, and you'd be like, oh my God, this is definitely something I want to learn. But then if I would actually explain to you the potential losing streaks, winning streaks, and everything in between, you would be surprised of how many losses you may take in a overall winning outcome, you know. So I'm going to bring you a lot in terms of the workshop. So right now, please do let me know if you do have any questions, or any comments about, the session, or some reflections perhaps that you took. Otherwise, we will move on into Wednesday. And on Wednesday, I'm going to prepare you some interesting factual things with really great returns. But I'm going to open it up even more for you. And perhaps opening that up is going to help you to understand it on another level. So let me just scroll through a few questions. We also have, this is live streaming also on X / Twitter, and we usually have around 1,000 people watching there. So we're engaging on different platforms at the same time. So this is the best platform for the webinars and workshops, because numbers here on the live are dismissive to the actual numbers that are actually now being watched on X. And If I can't see any questions, or if you do have any questions, you can come to YouTube if you're watching it on X, and then you can ask me those. Otherwise, you can hold on to those questions till Wednesday, till 6 p.m., and I'm going to discuss them with you then, give you tips, discuss more depth into the things that I want to talk about with you. Apologies for my light going off completely. Perhaps because of Diwali, there's been some issue with electricity and all the lights in my room just went, but I'm glad you can still see me. So guys, it was an absolute pleasure. Hello to all of you again. Goodbye to all of you till we see each other next time. As always, it's been my pleasure to be here, and I really am hoping that this subject has really helped you to open up certain areas of the way you think about trading, and we're going to dive into it more on Wednesday. Thank you so much, guys, and have an absolutely fantastic evening. Take care. Bye-bye.